Good afternoon and welcome to the end of day review for today. And today is Thursday, March 2025. So one more day, we close out this week. So we have a lot of beautiful move this week, yesterday and today. As long as we are patient and observe the market and the level that important and critical, then we can make the money. We can make the money all day long. So, by the way, we are right here, Thursday of this week. This week, the critical or high impact news is yesterday, and today is the day after. So very beautiful. So we have a setup called the day after. You can see that. And yesterday we see that if you remember last episode, we were talking about the CPI, not CPI. We misspoke. The FOMC day, right, where we can trade them. We spot some pattern, but the pattern from yesterday is completely at least new to us. We haven't seen that pattern before, but it's nevertheless it's a very interesting pattern, and it's extremely easy to trade. Yesterday we did took some trade, and today also. That's beautiful. So this week we have five fully trading days, so perfect week right there. And FOMC is the best week to trade. By the way, we're on week 12. One more week, we will close up the quarter one. So basically, 1 year we divide up into 52 weeks, and 52 weeks we divide into 4 quarters. So it's 13. It's like you play a deck of cards right there, 52 cards, and each player have 13 cards. For option, this week we have right here, the 21st, the 21, which is tomorrow. The 21st tomorrow is a equity, an option standard expiration right there, and it also is a quarter. You see that? And a quarter also, first quarter, June right there, and March right there. That's the first quarter. So this week is huge. It's huge for this week. Either the 28, yeah, this color is hard. The color code is very hard to read right there. So you wonder if this color match this color or it match the darker color. So it look like this one match with this. Yep. And then we see in June. Yep. It should say right here, to give it a day, the last Friday or something. Is easy to distinguish. Otherwise, we have to make good guess. But the basic idea is that March, June, September, and December, that is where a lot of volatility is going to go on because of the option. So we have FOMC yesterday, so it kind of behind us. So if you look up for next week, it's gonna be GDP data on March 27. So for the FOMC meeting, keep in mind that we just had it yesterday. And no on April. That's very interesting. No on February, no in April. Wow, we have one in May. So March is kind of very critical right there. Very interesting that if you look at the seasonal trending, March is the down month. Here. It looked like it happened exactly this month on March right there. You see, here's the charts that on the right side is the monthly, and on the left side is weekly. So you see that right there is October right there, and then you have December, January, February. Is that right? No. Let me see. Is that October? So right here, March, right here, February. You have January, November. We missed that, and it is December right there. Huge move December. Set up for a short setup in March right there. So in the monthly table, on the monthly data frame, we see a setup on March, but after that we don't see anything else. So on the weekly, we can see that right now it looked like you see the level right here. So it tests from above right now. This week still above on 56.73, very critical for that. And we're gonna look into the 15 minutes to see if it broke that level. We will break the level, then it's gonna break down, because we don't see that. Let's see, the two scenario right here. It hold at that level, that means we can see a retracement. But if we see that it continues to go down, then you see it's a lot of liquidity out here. Whenever we see the long week test from above, that means there are a lot of sell side liquidity. It's gonna go down and take all that sell side liquidity, grab all that sell side liquidity right there. Alright, so that is the idea right there for FOMC meeting. Okay, let's go to the pattern that we see the FOMC meeting. Alright, before we go to FOMC meeting pattern, let's finish up with the 15-minute chart for today. So you see that right here is the FOMC yesterday. You see that you mark that level, very critical. If the high of this level, you can see that today it really mark the high up and the low of that candle. Give us some idea how the liquidity build up around that level. So we mark the low right here. So it didn't did the low. It almost touched the low, but it did not. And you see the level right here. You can see the setup. Okay, let's mark the high. Just the high right here is 57.16, right? 57.16 even. And the low right here is 56.82. So the question for us, why it did not break or at least test it level? And maybe tomorrow it's gonna go down, because you remember we look on the high time frame, the 56.73 is very critical. It's very critical. That maybe it saved this for now, for today, but tomorrow it's gonna take that sell side liquidity. And one of the reasons that you can see right here, we have a setup is a reversal, type 1 reversal, very strong. That's the reason why it still become a support level right there. So the low of this candle, you have 92.25. So we mark the high at FOMC at 2 p.m. yesterday, and then you see that it's very remarkable 1 hour. You see the huge 1 hour run right there, and then you have a huge Dow close candle right there. And right here we have beautiful setup. If anyone get up at 4 a.m. in the morning, then you see the beautiful setup right there. Just mark the high right there. What do we see? Break, test from above, reverse. That is the type 1 right here. You have a type 1 right here is long, and then you have a type 1 up here. It's the short setup. So I have a lot of beautiful action or setup for. So the high of this is 74, 57, 74. You see that? You see the setup right there. Break, tap from above, boom, reverse. That's type 1 right here, and then you have another type 1 reverse right here. It's 630 reversal. But this one is it make another retracement there before it is shoot up. At the 930 it also give it a beautiful setup. If we look at here, you can see that. You see that? The level right there. It's a little bit tricky, but if you see that, or you can mark, you see that right here. This morning when we see right here, we know that this is not done because this one is covered inside right there. So it's the candle after expansion, give it a lot of information to see how the algo market maker run the price up and down around that level. So you mark this level, you have the high right here, 56.96, 56.96 even. So you have a lot of stuff right here at 930. You see that? What is up right there? You have test from above, break and reverse, type 2 right there. See that? And then boom. Don't go early. Remember, we're gonna watch these. When is this one flip? You're gonna see that. So here's the recording. We captured that at 930. You see that? If you mark this candle, you see it's remarkable, beautiful right here. You see that? It tests from above, break it and reverse. But don't go early, right? But if you want to go early, the stop loss is very tiny, so you check. It's better for you to go early. But anyway, you see that there, it flipped. And look when it flipped. Not even a minute. Let's see if it's just even a minute. It got flipped. But when you look like it look very scary, right? But look right here. The market give us the signal right here. See that? Mark that level. You will see that so you see that if you mark this level right there, you can see that that's the setup forming right there, and you can see that it fall into this range. You can call support level or demand level or demand range right there. A little bit scary because we thought that it's gonna be take a sell side area because they both test from above, right? But if you look right here, the market give out a signal. This is a what? This is a break and reverse. Test from a break reverse, type 2 reversal right there. Yeah, here's the reference for that when we say type 2 right here. Basically, we summarize or we simplify the two types of reversal or fall breakout, right? Whenever fall breakout, then you have reversal. And in this case, that's the reversal type 2 on our left, on our right there. So in the long setup, you see that test from above, break and reverse. So this guy right there, test from above, break and reverse. And in this case, we have two times. That means the reverse is going to be very strong. Break, test from above, break and reverse. So the first minute it looked like scary, but as soon you see the flip, then you can go in. See that? Let's make it a little bit faster. So yeah, it looks very scary, right? But that's exactly when we need to check the trade. See that 1 minute? That's where it's right there. $71. Yeah, let's see. Wow, see that? It's okay. Now it stop flip right there. 1 minute and 9:30. You see that? It's just 1 minute. The first one is it start retreat right away. Let's take screenshot of this also. Yep. Then you see Korea. As soon as you see it hit it level, it tell you that that's what the formation happened and going and go along. You see that level right there? Let's see. The 4 breakout reversal type 2 forming mesh right there. So basically it formed just 2 minutes into. See that? That's a beautiful setup for right there. If we are my scope and do a detail on that, we can see right there. Just 2 minutes right there. 32. Let's take a better screenshot than this. Yep. We're going to capture the timestamp. Yeah, 2 minutes. You can see that. You can see that. You can see the level right there. See the level? Beautiful right there. You see that? So you have, that's from a break and reverse right there. That is the type 1 reversal. Yes, this called, not type 1. We spoke. It should be type 2 reversal. Yep, type 2 reversal right here. Four breakout reversal. Type 2 at 8:30, 9:30. That level, let's look at the charts. What's the number for that level? Yeah, 56.96 right there. You see that, the high blood level, 56.96. Beautiful right there. $56.96. $56.96. Yeah. $56.96 even. Yes, right there. Remember the type 2 reversal is test from above, break and reverse. Just go back there, you see that? Test from above, break and reverse. In this case, it's a long setup, so that exactly right there. We have everything for us beautifully set up for right there. Alright, let's save this. Alright, we just save it, and you see right there, that the setup. Wow, where's the target for us? The target at least right here. You see right there? That is open at 1800. That's the target right there. Let's help. We can put a target right there at 5730, right? 30, yes, 30. Which is right here at this open right there, 30, 31 right there. So mark that level. We have a target over the open. So whenever we see that is below the open and it have a setup reversal, then the target, very easy target, below hanging fruit target gonna be the open at 1800. That is the magic right there. So 3175. 3175. That's the target. We don't have to exactly, but put around there. Boom! You see that at the 10, it hit right away. Then we have a huge run right here. Basically, how many one we have? Let's say we go in right here. Strictly just right there, we have a huge run, 38 point right there. So 1R is 5 point, 38 almost, 8R right there, 40. Roll up to 40 divided by 5 is 8R. Can you believe that? Got 8R right there, very quick because the market moved very quick. You see that? Huge. That's beautiful. So you have the setup right here, you have the setup right here, type 1 reversal right here, and right here you have a beautiful setup. Type 1 reversal right here, but you have to take the target right here. It's gonna come down and then it's create another leg down or double top or double bottom. In this case, double bottom right there, and then you have a type 2 reversal right here. So beautiful, boom! It's explosive. And then up here, we have a setup right here, but very hard to see. And it happened very quick, and we did take advantage of this setup, which is similar. It's type 1, it's type 2, right? But in this case, it's the high level, high time frame level, which is sub 59.75. If you look in the daily, you can see that level very critical. Basically, you see that yesterday is already touched that level, and today is try again, and as soon as it hit that, you see that test this below, break and reverse. That is the type 2. Type 2 for the short setup right here. Test from below, break and reverse. That's what happened right there. And for the daily, we can see that that's level 59 right there. Yesterday it also tested, and today as soon as it touched the level and it reversed right away. We can put a buy stop right here. We did take this right beautifully. However, we take a quick profit. We don't stay long. If we stay long, we get a huge win, because we know that eventually it's gonna come down to whatever yesterday when they ingest the liquidity for FOMC meeting right there. So it's very cool, very good to trade on the day after they ingest liquidity, because you know that they give some signature for you right there. So if you see that around that level, there are set of reversal, then going. And then if you see star it hit the critical level, it gonna reverse. Then your target gonna go back this candle range right there. So just be patient, wait for the market setup liquidity, then we know it's very easy. With more than 50% that we know what the entry gonna be and what the target gonna be. That's exactly happened today. So for this one, we go with target right there, and then when it come back, you see the another setup right there. And that takes three screenshot and put some Notion. Is that right? Notion. I don't know, put some caption on this. So all right, we save it and we put a little bit verbiage in there. It's easy. So they all type 2 reversal. So test from above, break and reverse. Test from below, break and reverse. Beautiful right there. Couldn't ask for better. So if we go here at least with the target at this range that open at range right there. And after that, we can let it run. And when we saw the short setup right here, short setup right here, the target gonna be at least 18 right there. It's gonna go back at the open right there, or at least gonna be the high of the FOMC right there. It touched the level. When in the afternoon, when we see this huge giant candle, we thought I'm gonna go and take all this bell size big, but for some reason it stopped right there, and then it reversed. It go down. I think we saw right there also. But we go to the trade we took, and you will see. All right, before we go to the trade, I want to summarize real quick what we learned of trading on FOMC meeting. All right, here's our playbook note. For last time, we tried to build a playbook for how you trade on FOMC meeting. And the data sets we build up right now. So we have 1, 2, 3, and yesterday we have another data set right there to add into our case study. So we see that from observe the last 3 FOMC meeting. So we saw that if at 2 p.m. there is suspension, and then you have a retracement at 15, then the 30 minutes later, 14:30, gonna be expansion or gonna be expansion. Expansion can be reversal or can be continuation. And if we have the 2 p.m. expansion, and then you have a night at 2:30 is also expansion, then looking for then don't go in and chase at a 45, because it's gonna be a non-expansion. Another scenario is that if for some reason we saw that in November, the 2 p.m. or the 14 hour is non-expansion, and then for the rest 3 candle on the row also non-expansion, basically it consolidation right there, then the 45 gonna be huge expansion. All right, now look how it's gonna happen for this week, which is yesterday. We're gonna take a look right now. So let's see. Yesterday is March 19, right? March 19 yesterday, FOMC meeting. That's right, FOMC meeting. So here's the screenshot we take before. Yep, before. And yep, so right here is the weekly and the monthly and then the daily, and then on 15 minutes. So we see the huge consolidation right there. And here's at the end of the day for right there. So it's break Test volume in reverse. Yeah, that's the yesterday right there. Right, first leg retracement, boom. And that's here we see right here. So basically we have a 14 expansion, and then we have a 15 415 a retracement, and boom, in this case you have a 30 expansion. So I think it fall into one of our scenario right here. Yes, so 430 in this case, it fall into this case. So our data sets for March 19, 2025, we have a typo right there. So this fall into this scenario. You see how it's beautiful is that? Yeah, it fall into this scenario. The retracement right here, then boom, it got expansion. And also in here you have expansion continuously, 1, 2, 3 in the row, and then you hit the high time frame level, and you see the rejection right there. Don't take this at a long setup. In normal situation, whenever you see the wick on the top, which is test from below, you thought it's gonna be breakout, right? That can be a mistake. But in this case, in the huge liquidity injection day, then this can check at a short setup, especially if it hit the high time frame level. So we did go in and short yesterday right here, right there. So it's today it fall into 1 hour scenario, but it have a new scenario right here, which is the 40, 1430, 1445, and 50. That's another scenario right there for us. We put into the notes right there. Go back to our playbook. Okay, that's the note right there. In this case, expansion, and then this is, and if 445 and 13, no, 15, is that right? 15, both expansion, then 15, let me make sure we got it right here. Make sure we get the time right. So right here, basically we talk right here, 15, right? 15, and then the 15, basically 3 p.m. 15 minutes. Then 3 p.m. 15, 3 p.m. quarter 15, you're gonna reverse. It's gonna be reversal. Yes, that's the case for yesterday. That's the point we tried to make right there. If we watch in the real time, you see that this one is the last candle. It looked like it's gonna fall out from here, but it make one last move before it move up. We do take the trade that right there. Let's see. So here's the trade we took yesterday. Let's go through all the trade we take, so and then we can see. So here's we go in at 9:30. You see that? We try to get. We saw that it's gonna break out at level, so we go in 33. So 3 minutes, and then boom, it come back. So it stop it out. Perfect. Make mistake. That's okay. That's how we learn. Okay, so we saw it flip, so we go on, we short and we jump heavily right here. We add 10 more contract. Let's see how it's play out. Not play out right. Boom. As soon as we saw profit, we take it out right away. And let's see. And then it come back. And this trade, we're going and go short again. And we got stop out. You see that? That's a mistake right there. You cannot short twice right there. Just be patient, wait. But anyway, we learn. We learn from mistakes. And here we're gonna go long. All right, perfect. Let's see. Yes, here profit for right there. Because you see that right here, it break and reverse. There's no way for it to come back to the level 83. As soon as you come back, you know that it's gonna be explosive. And we're going and hula, we hit our profit, hit our top lot right there. Is that 01? We take early profits, or let's see, so 01, right? 01, yes, not there, yes, it not even hit 01 yet, but we just take out quickly. We just want to take a quick over. Or did it 01? Maybe it hit the 01. Yeah, 01 right there. Yes, it hit our target. So we didn't take early at all. It hit exactly our targets. So we get a full profit right there. Yes, we take full profit right there. Beautiful trade. So we look at the daily right there. One thing we want to make that on the trading view, the aggregate daily looks so much different from the Thinkorswim. We just notice that, so we know that maybe the data sort from both of them are different. That's the reason why the aggregate is so different. Wow, this is another trade. So we should let it run and we get another with it. But anyway, we aim right here is perfect. It's around there. We check it's okay to keep little money on the table. And right here we feel like alright, maybe a short setup right here. So let's see what is there here. Alright, so wow, we go long right here. Why we should go long right here. Go long right here a little bit too late, but let's see. You see that? We just try one contract. We make mistake right there. Don't do that. That it should not. Alright, so we go long again. Oh, this time you know why? It's the 2 p.m. right there. We jumped the gun too soon. But anyway, we going and go long again, and we add more contract, and it come back. Really looks scary. We move stop loss because we don't think it's going out there. But that's a risky move right there. It lost 4,000 right there. But 6,000 at one point. You see that? That's the huge loss right there. So next time, don't jump in too early because it fluctuates, right? At least going after 5 minutes. And eventually, it come back and have some profit. As soon as we saw profit, we take right away. Boom, so we get out right there. Because we see that one more minute, it will close our candle, so we don't want to wait for next candle. And boom, right here, we short them. We short at 45 because we thought that it's gonna be reverse. But the good thing that we just go with one contract. Okay, so we add more. Let's say, did we take profits? No, we didn't take profit. That's mistake. Boom, boom. We should take profit right there because you don't know, right? You make a very there's no setup right here. So if you want to go with momentum, then you have to take quick profit as soon as you see it. So that is the mistake, the lesson we learned right there. Boom, as soon we saw this, we know because it's high time frame level, right? It break down equal, so we go in short right there. You see that? We look on a daily time frame, we see this hits the level, boom, it will be reversed. Exactly, you see that? It reversed. Wow, boom, hit our target beautifully. That's the beautiful trade right there. So that is at 15, yes, so break and reverse. Yeah, that's the last the last trade we took was yesterday. Okay, now look at the trade we took for today. Alright, here's the trade that we took for today. So we look at the daily time frame. We see it's coming down. So maybe it's gonna revisit the 56.73 right there. That's our thought or thinking. So I go to 9:35, so 9 minutes after the opening. See the huge right there. Well, we didn't catch the type 2 right there because we have something to do. So when we look at it already formation right there, and even though we don't have, we don't know what the target is gonna be, but now in the hand side we know that the safe target is gonna be 18 open right there. See that? So we mark down that level right there. So this is the candle range right there and hit that level. Okay, so right here is where we engage short because we see that it hit high time frame level. Then boom, it's gonna reverse from here. So that's where we're going early, and we add 10 more contract right there, and it come back make a little reverse. But anyway, as soon as we have profit, we take out right away. We only let one contract run, boom. You see that? If we don't take quick profit, we pay right away. So that's the beauty of that. Because right here, we little bit take early, right? Because the setup is not forming yet. So this one, the next step you see very clear. Okay, so now you have formed it right there. So test from below, break and reverse. That's type 2 right there. So we go in, we know exactly. So we also take early profits. Got in, so profit we get in, and we move the rest to break even. Let's see. It didn't hit our targets right away, so we just get out. But it will let it run. It will break all that. But our strategy for today just take quick profit and get out. Maybe another day we let it run. So, but not for today. All right. So we see right there. You see that? It tests from below, it's gonna revisit, it's gonna break it. That's where we're going. We add more contract, boom. As soon as it have profit, we take out right away. We leave 2 contract run and we move our stop loss. And right there, I think we add more when we see that. And then boom, we just let it run, move, stop loss to break even, and boom, we take out. We just exit the trade. Beautiful setup. And now we look at the daily again. We say, oh, maybe it tests from below. It will break that level. So right here at 44, we going. We see there's no reason to come back here. You see that level right there? It break, reverse. There's no reason to come back. To come back is to break the level. So we go long. Kisses, we go short. And as soon we have profit, we take profit right away, and we let one contract run, and then it come back, it take us. So we good. So the idea is that if we either way we make money. Whether we make more money or not, right? If we're wrong, then we make less money because we let one contract run in there. But if we're right, we get more money. So either way, we're gonna make money. It's the whole idea right there. So we go in right here, we go short again because there's no reason. I think we're thinking it's gonna go at this level right there. So let's see how it's play out. Boom, it hit that level. And I think we take profit right here. Yeah, we take profit right away. We thought it's gonna go through, but it did not go through, so better take profits, and we did beautifully. Okay, so then now we're gonna see if we let one winner run right there. And if we feel like it's very weak right there, it may retrace, so we get out. And that's it for today. So at 4:30, it's hit the level of 56.97, 4:30. No, 2:30. Let's go back to the chart to see if that's the case. Yeah, so we get out there. Yeah, right here. If we don't get out, we're big trouble right there. So I think it's perfect right there. Exactly. Beautiful execution. You couldn't ask better than that. All right, I think we run out of time. We are always grateful for the opportunity, and day by day, little by little, we're doing better, getting better, doing what we love, and success is coming our way for sure. Have a great evening and talk to you later. Bye for now.